In this video, we're going to be breaking down the 10 commandments of a successful capital raising. Okay, so this video is effectively designed to be your high-level guide as you're thinking about going into your capital raise, both from a process perspective and also just from a psychological perspective as well in the way you actually think about it. So first things, let's go through number one. Okay, so number one is be realistic about your time frame that it's going to take to raise capital. Most people overestimate what they can do in 2 years. Most people overestimate what they can do in 2 months, but underestimate what they can do in 2 years, 2 to 3 years, right? So typically what happens for most people when they go into a capital raise, they feel so much pressure to get it done within a 2 to 3 month time frame. And it's unrealistic for most companies. Unless you are doing 20% month-on-month growth because you're in the very, very early stages, or you're a bit of a growth stage company, you're doing 100% year on year. I said it's unrealistic to expect that you're going to be able to do your capital raise in that short a time frame, right? So just give yourself that mental preparation, give yourself the time and space, right? So that you're not overcomplicating your own capital raise by putting too much pressure on yourself to raise in a super short period of time. Okay, next one. Take a relationship approach rather than a transaction approach. So most founders will go out and they'll do pitch to anyone who will listen to them or to try and get a conversation, instead of actually taking the time to build a relationship, allowing an investor time to sort of get to understand your business a bit more. You got to understand when you're going to raise capital, you're competing with 15 to 30 other people that are also pitching in that month. Right, so the ones that typically stand out is the ones that will have that relationship approach, or that will also have incredible growth figures that go along with it. Okay, next one. Build relationships instead of burning bridges. I understand that when you're going through a capital raising, you can get quite frustrated, right? It's an emotional roller coaster. You go like this, but it's crazy at the moment how many people are just torching bridges. This is a very, very small industry, and most people actually do know each other, right? And they also understand how challenging that this space is. So if you're having difficulties in a certain area, just be aware that you're not the first one to have that, right? So build relationships, build understanding. This process is one where the more inquisitive, the more curious, the more open you are to suggestions, I say it can really transform the way you understand about your business, the way you think about your capital raising, and ultimately the strategy behind your business as well. Okay, next one, fourth one. Sell your opportunity, not the product. The investor is not looking to be your client, right? Too often we see pitch decks, we see pitches from founders where it's really focused on selling the product and how amazing their product is, where they're not actually selling the opportunity. They're not selling their traction. They're not selling people behind the business. They're not selling the size of the market that they're going after, right? And they're not trying to sell why they are so different. So it's really important to understand that when you're pitching investors, sell the opportunity, not the product. That's commandment number 4. Commandment number 5, communicate the milestones, achieve them, and then communicate the achievement of them. Okay, so commandment number 5 is communicate your milestones in advance, then achieve them, right? Very important, because nothing builds traction and builds awareness like hitting milestones, and then communicate the achievement of those milestones as well. That is it's basically the promise, do, tell approach to actually raising capital. Number 6, right? Commandment number 6, build capital raising systems and processes for yourself, right? Instead of just finding new people to pitch. As I mentioned earlier, people will always think that grass is greener on the other side. You just got to keep on speaking to investors. I just need to speak to the good investors, right? The good investors being someone that puts money into your company, right? The reality is, I said, people don't create systems and processes for themselves, so they actually feel out of control because they're just going from pitch to pitch to pitch and then effectively just waiting for the response from an investor to see if it's been, sort of taken on board by them or if they're interested or what's going to happen next. Build capital raising systems and processes so that you're in control of the process and you're managing to a process. One of the sideline benefits of this is it helps smooth out the emotional journey that you go through when you're raising capital. The feeling of feeling this big when you get a rejection or feeling like you're bulletproof when an investor says that they're going to go ahead. Okay, commandment number 7. A no today doesn't equal a no forever. Very, very important. Said, I've had people that I've known for a very long time that have previously rejected, my opportunity in my company that are now shareholders. There have been a lot of people that have actually experienced this, but all what happens most of the time, and I remember doing my interview with Jason Calacanis where I asked him the question specifically, when you're dealing with founders, and you've rejected them, do you ask them to keep you updated with their progress? And he says, yes, we do. We've actually got a process for that. And then I asked how many founders actually do it. And he says, single-digit percentage. Update investors that you've spoken to. The way you've got to think about it is that every investor you've spoken to over the last 12, 24, 36 months could actually be a potential investor in the future. They're just waiting for you to hit the right milestones that trigger them for being a relevant opportunity. And they may have communicated those milestones to you, or they may have not communicated those milestones to you. That is the power of communicating milestones and then, communicating them in advance and then achieving them and then letting people know about your achievement of them, right? This is an actual process that we're going through. So for me, commandment number 7 is a no today doesn't equal a no tomorrow. Number 8, when being rejected, be open to suggestions, right? Instead of feeling insulted. Often, right, because we're so passionate about our business, we're so sort of tunnel vision about building it, we see what's in our head, we've got our perspective of the world, and often it's very different to others. And that's, honestly, it's what makes founders so interesting to work with and what makes them great. You've got to understand that when you're dealing with investors is that they've got a beautiful helicopter view. They would have seen similar opportunities to you. They would have understood similar types of business models. They've seen just that a lot more. So when they're providing rejection and when they're providing the reasons for the rejection, that can actually be a great triggering point for you, which can actually transform what is possible for your business. So for example, for me, I had someone that's become a mentor of mine, a good friend, basically reject me. And first thing they said straight off the bat within 5 to 10 minutes in that I don't like your business model and here's why. And then he showed me what he does like in different business models and what he typically invests into. And from that point onwards, for the next 12 to 24 months, that really set the foundation of my strategic thinking for going forward. Right? So rejection can be super powerful. Now, not all rejections are going to add massive value to your business and to your thinking and to your strategy, but some of them can be, as I said, absolutely invaluable. So don't get insulted when you get rejected. Be open to suggestions. Be open to the thinking of the investor that you're having the discussions with. Next one. Commandment number 9, create momentum. It is the most important aspect of a capital raise, right? So when you're thinking about your raise, as I said, going from pitch to pitch to pitch, or just having a conversation with one investor and them being the only one at the table to have that discussion, what it does is it means that you've got no momentum, right? It means that you're not in control and you're not leading the process for the actual capital raise. It means someone else is in control, right? Your job as a founder is to be consistently creating awareness for your company and driving engagement, whether it be into your deal room or just generally into your opportunity. That is your role in the process. As I said, most people, they'll just spend time on just trying to get close, rather than building that pipeline of awareness of potential investors. And if you think about the actual 3 stages of a buying decision, it goes awareness, consideration, and then the actual decision part. So what I like to help people to understand is that in order to create momentum, you've got to spend a significant amount of time in that awareness and consideration part. The more time you spend in that stage of the actual capital raising cycle, the smaller the actual decision component will be and will make it a lot more efficient for you. All right, so that's capital raising commandment number 9. Now, number 10, as the finale, right, is more about you. It's more of the personal one in that take control of your process. Controlling your process is super important, right? Typically what happens when you go into a capital raise, you often will take advice from either our investors in our business or investors we're having discussion with, or even potentially advisors, right? They either sit on our board or that are acting externally. And they'll always say to you talk to you about capital raising, you've got to finish your capital raising in 2 to 3 months. If you don't, it looks bad, it looks this, and etc. Right? And they put that fear into you that if you can't complete your capital raising within 2 to 3 months, that there's something wrong with you. right? So I'm going to finish on a slight variation of where we actually started with these commandments, in that commandment number 10 is take control and be diligent, right? So every single day, chip away at your capital raising. Every single day, look to have a conversation with a potential investor or an existing investor into your actual business, or someone that you've spoken with in the past, right? That you know that expressed interest in your business. If you are having daily conversations and you only need 30 minutes, it will sometimes even 15 minutes. It will transform your actual engagement and your relationship process with investors. What I found for me was the longer I went without having conversations with investors, the more anxious and the more nervous and more excited and so forth I would be. And then I would handle it in the wrong way, and that I'd be overexcited, I'd be over communicative about the business, etc. Right? So for me, the way I took control is, I said, just simple habits every single day of having a conversation with an existing investor or a potential investor, right? And now it's just in my habit, right? I just enjoy it. The second part is that, for creating this, I suppose, this diligent process, or, I'm getting feedback daily on areas of my business. And if you think about your business as a ship going towards its destination, all along the way, there's little adjustments to be made. So sometimes you can talk about challenges you're experiencing in these conversations, and they can be of assistance with it. So that's the 10 commandments for raising capital. I hope that's been helpful for you. I'm just going to go through the top 10 again, just as a reminder. So the first one is be realistic about your capital raise. So most people overestimate what they can do in 2 months, but underestimate what they can do in 2 years. Number 2, take a relationship approach to your capital raising, not a transactional approach. Number 3, build relationships instead of burning bridges. Number 4, sell your opportunity, not the product, right? The investors do not want to be your customer. Number 5, communicate your milestones in advance, achieve them, and then let people know, communicate that you achieve them. So the promise, do, tell. Number 6, build capital raising systems and processes, right? Versus endlessly just finding new people to pitch in an ad hoc way, right? Next one, number 7, a no today doesn't equal a no forever, right? Very important to understand. Number 8, when being rejected, be open to suggestions rather than being insulted by feedback. Number 9 is create momentum. It's your most powerful weapon in a capital raise. And then number 10, rounding out the 10 commandments, is take control and do diligent daily actions towards your outcome.